It's not a market where you can be lazy as a real estate agent.
And it's amazing to hear from the real estate broker because usually it's always a good time to buy, right? That's why I love Serge, because he actually giving an honest opinion here.
It's more of an ego check rather than rationale.
That's a pretty solid advice.
Folks are no longer asking in the parking lot, how quickly can we buy this? They're asking, how quickly will rates go down?
That's what Donald Trump is offering right now.
So it's a bit scary for developers.
Well, hello, everybody. Welcome to Money Show with Dmitri Ivanov, the place where we discuss real estate, financial, and investment markets in Canada. And today we have an exciting guest, Serge Popov, who was a friend of mine for the past decade, and he was a great business partner. And I was excited to see his growth in the real estate industry. And you were in the industry, for about 17 years right now, right?
Something like that.
Yeah, something like this. You were involved in the real estate development and commercial banking, I believe. So maybe if you can introduce yourself, that would be great. Yeah.
Hello, everyone. Thanks for having me, Dima. Great guy whose advice you should follow every now and then. I started in real estate in my undergrad from short-term rentals, then got my real estate license upon graduation from this university called Schulich with accounting and finance major. I went into banking. I did retail lending and investing. Then I switched to a different bank where I did some small business and commercial lending and investment. Then I got bored, went back to the same university for my MBA. After that, started the real estate brokerage, organized a few partnerships, started investing in different parts of GTA and outside of GTA. Helped some folks understand how can they finance some of their purchases. Then that grew to me buying some sites, doing some low-rise residential severances. On those severances, I would build custom homes. That grew to me speaking to mid-rise developers, helping them get financing and transactions and hunting land for them and amalgamating land for them. And eventually, we ended up buying a couple of sites for ourselves and started doing high-rise residential development.
Yeah, so pretty substantial experience. And I know Serge probably one of the few realtors whose business card picture actually looks exactly how it is. Just graduated from university, right? But this guy doesn't age, but he has a tremendous experience behind him. And I'm glad to have you today and discuss what's going on in the real estate market. So, going from here, let's jump into the market overview. I mean, everybody knows that the market is down, right? But what are the trends that you see as of the past couple of months? What's happening with the real estate market, if you can share with us?
Couple of months, not much has changed as what's in the past half a year, except maybe buyers became a little more active as we saw a couple of interest rate cuts. But in general, in the past couple of years, things have been slower than during COVID. Folks are no longer asking in the parking lot, how quickly can we purchase this? They're asking, how quickly will rates decrease? Will I break even? If something happens in my family, will I be able to carry this monthly? Can I add a basement unit here? Will the city allow me to have a separate entrance? They're more, I wouldn't say they're just fear questions. They're more mature questions. I think buyers have time to process their purchase, and there's less FOMO nowadays.
So would you say buyers became more strategic versus more emotional as a few years ago?
Definitely so. Folks are no longer asking in the parking lot, how quickly can we buy this? They're asking, how quickly will rates go down? They're asking, when can we see this for a second or third time with an inspector? How many conditions, which conditions should we add? Should we put a condition where we have to sell our home first before firming up on this one? They're not just fear questions, they're more maturity questions. So the market has matured in part to the slowdown, and people are making more rational decisions.
So with interest rates, that's basically been going down, right? A lot of people say that interest rates do not play as a major decision anymore because people worry about the job market, they worry about the trade wars, right? From your perspective as a real estate broker, do you see that rates, that a recent reduction affects the market in a positive way, or it didn't make a dent in the buying decision right now?
It definitely made a dent in the spring. Transaction volume was significantly lower than in the fall. People are definitely more concerned about what's happening geopolitically. But at the end of the day, it's simple math for any family. Can I carry this property while I'm living in it? Or will it break even if I purchase it as an investment? And interest rates play a direct role into that formula.
Okay, so we're talking about buyers right now. What about the selling side? Did you see that the sellers still living in the 2022 kind of environment in their minds, or people start adjusting to the market realities today?
So I'd say around 30% are still living in 2021 peaks. 70% are more realistic, more reasonable. And those are the listings that end up selling. They list appropriately relative to market conditions. Others are holding on to what they've seen years ago, and they don't want to accept, hey, I didn't take this offer, and now my house is $400,000 less. It's more of an ego check rather than rationale.
Okay, perfect. So, in your opinion, what type of properties right now are moving? Is it based on the property, kind of condition, or from the selling perspective, it based on the strategy, right? If they're really reflecting the market requirements right now.
So I'd say you can answer that question in a few different angles. One of them being financing, of course. If you're buying a $3 million property, you're most likely not going to get away with a 20% down payment. You'll have to put a little more. But if you're buying 1.3, 1.4, then you will be able to purchase it with 20% down. So I'd say number one is financing and a price point related. So 1.5 and under is moving. 1.5 to 4 million is probably the slowest. And above 4, a lot of participants are already coming in with a heavier down payment percentage or in cash. So I'd say those areas, especially in good school zones, haven't really been affected much. The next point I'd say is, does the area have employment, transportation, immigration? If those 3 points are there, that area is moving. If not, if one of those factors is not there, you're increasing your listing time by 30, 40%. If two of those factors are not there, maybe you're doubling your listing time period, and you're probably adjusting your price as well.
Okay, so in your opinion, what's the average listing time right now compared to before?
So if we're talking, let's say Toronto, south of York Mills, and you're priced reasonably, 30 to 60 days. If you're speaking GTA in general, if you have a fully finished house, finished basement, walkout, if you're freehold, if your monthlies work, buyers nowadays are asking more monthly carrying questions, not purchase price questions. So if those factors align, I'd say under 30 days. If not, you could be looking 4 months, 5 months, 6 months. If you're outside of GTA, several relistings. That if the property's relisted several times, probably means that the agent didn't do a good job and it was mispriced.
So I noticed today a lot of real estate agents walk away from the staging, right? They would rather give more commission to the buying agent because they don't want to spend money on staging. Do you think it's a sound strategy? Or do you still think that a good brokerage should basically present the property better and spend money for listings?
Yeah, in general, it's a buyer's market right now. In buyer's market, you need to do everything to the maximum. As an agent, you should you should stage every single listing. Saving, let's say, $8,000 or $5,000 on staging, let's say that it represents 0.5% of your transaction price. The value of staging will add maybe 1-2% to your transaction price, not to mention that your days on the market will be 20-30 days.
So you're getting costs are going down, especially if you're in a resale environment where you bought pre-construction, just trying to sell or you build a house.
Right. Not to mention that the longer your DOM, days on the market, the worse your stigma against the listing is. Buyers are thinking, why hasn't this sold? Why hasn't somebody else bought it?
And I generally agree, which in this market right now, it's super important to see how the property looks after the purchase, because a lot of people do not have imagination. They'll come to an empty property. They do not see the end result once you put the furniture in. So this is why, I think personally, from my experience, it's better to have an agent who will actually make your property look good. So when the buyers come in, they will see the end results. Do not go with the idea where, I just listed as an empty unit and it's going to sell. These days are gone. People actually want to see what they're getting, and you have to show people the end results, not just a halfway through picture, which a lot of people cannot imagine how the house will be looking like when there is a nice furniture set up. So I think that's a pretty solid advice in today's market. What do you think?
If you're saying solid. No, but yeah, 100%. An agent's job is to do everything they can to move the product. So proper marketing, proper exposure. I know you might not want to hear it, but open houses every Saturday and Sunday, 12 to 4. I'm sorry, it's 8 hours per day, plus the setup cost, the setup time, and driving around the neighborhood distributing those open house signs. But you got to do it. It's not a market where you can be lazy as a real estate agent.
I guess AI will not replace the real estate agent in this market,
Yeah, not for now. Maybe in our next generation.
I see. So that's when it comes to detached. What about the condos? I know the condo market and the statistics just came out that Toronto real estate condo prices just came down as a 4.7%, and the listing time increased by, I think, 17%. So where do you think the condo market is heading right now?
So if with freehold, with homes, we're talking about ability to have second income and how well the renovated the property is and how little headache the buyer will have. On the condo market, we're talking mostly about numbers. People are shopping with calculators. The first thing they look at is maintenance fees, property taxes. How much will this run me per month? So condos that have high maintenance fees are taking the longest to sell. If you're over 90 cents, $1 per square foot on maintenance, you're going to have a hard time selling unless you're in a premium building like the Ritz and you're priced fairly.
Okay, but let's again go back to condo market. From what I understand, there's two condo markets out there. The ones with the small condo units, right? Basically 500 square foot, just under or a little bit more. And there is larger condo units, right? That basically have 2 bedrooms, 3 bedrooms, which is not too many on the market right now. Would you say both condo segments of large square footage, small square footage affected the same, or there is a difference between two products?
I would say that studios got affected more. People want more space nowadays. 3 bedrooms got affected as well. At that point, people are asking themselves, why aren't we buying a townhouse? Maybe a freehold townhouse with no monthly maintenance. And the sweet spot is a 1+ den, preferably a den that can be converted into a second bedroom. That's the product that's selling the most right now. But to answer your question, I would say it's studios. Not just because people want more space, but also even though a lot of large firms forced 5 days per week employment after COVID, people are still reluctant to come back. And not every employer forced the 5-day weeks. And because of that, the demand for downtown living decreased. And single folks who lived in studios, a percentage of them haven't come back. They're on the outskirts. They're paying the same price tag, say in Guelph, but for an additional 200, 300 square feet, and they're working remotely.
Okay, I see. So out of the three segments, condos, townhouses, and detached, which one you think in today's market is the best price for buyers?
So what moves the quickest is freehold townhouse. Second is condo townhouse. Third, I would say, is detached with a possibility of secondary income. And condo is the slowest.
So in your opinion, if somebody owns a townhouse right now, is it a good time for them to upgrade and get into detached?
If you're really getting good value on the purchase, um, otherwise you're going through a pretty significant transaction cost. Um, I would, and again, if the calculator makes sense, if you're buying a detached where you're renting out your basement and your net monthly is the same as a townhouse, 100% do it. The market has gone down as a whole. So if we're saying there's a 20% hypothetically adjustment on a $1.5 million product, that's a $300,000 adjustment. On a $700,000 product, that's a $140,000 adjustment. So if you're taking advantage of this adjustment on a more expensive purchase price, you're technically winning. Even if you're selling whatever you have now that's at a cheaper price point for a lower price.
Well, that's the whole point, because a lot of people have different family situations, right? So they might have addition in the family, they might need more space, right? So what Serge is saying, and it's amazing to hear from the real estate broker, because usually it's always a good time to buy, right? That's why I love Serge, because he actually giving an honest opinion here that, if you don't have to do it, you might have to wait. But if there is a life situation where you need to expand the square footage, right? So the percentage that you might lose on your house, smaller home, smaller townhome, right, in this market, versus what you're gaining by buying a larger place, right? That still makes financial sense in a way. If you can obviously afford making the payments and carrying the property without going into any extra debts.
Right. Especially if whatever you're purchasing is giving you an additional cash flow that your previous property didn't have.
Okay,
Like a
perfect.
basement unit.
So how many buyers right now are actually considering an opportunity of adding that extra cash flow? Because before, a lot of people were saying, no, I don't want to rent. I don't want to rent the basement. I don't want to do anything to the property. Right now, you can actually build a garden suites as well that you can rent, and we'll touch upon this a bit later. But how much more people are willing to go into that type of venture right now?
So families with a child under 5, 7 years old are not likely to consider having a stranger living in their basement. They'd rather take a smaller unit that they can carry on their own without a tenant rather than a larger unit with a tenant. If it's a young couple, and if 4 years ago they weren't considering renting it out, I'd say almost 80% of cases, they're asking, how can we convert this into a rentable apartment? Or maybe the unit, or maybe they don't want to go through that headache and they ask for filters. We want a separate entrance in whatever we're looking at. The percentage of buyers that are asking these questions compared to 3, 4, 5 years ago has gone up maybe 3, 4 times.
Oh, wow, that much, eh?
Yeah.
Amazing. Well, we can kind of see it in our financing side as well, because especially in certain demographics and certain communities, more so, because you would probably agree that in certain parts of Toronto, people just want to live basically by themselves, right? But there is different parts of the city where there is more demand for the rental suites. And in your opinion, how much would the rental suite, that's for the sellers right now, how much is the rental suite downstairs will affect the price of your property if you are to sell it?
If we're talking, let's say, mid Oakville, 2 million purchase price, unfinished basement versus finished on that price point, probably 100 to 150,000. So let's call it 5 to 7%. If we're talking about a cheaper entry point, let's say close to a million, 1.2, that'll affect the price by maybe 10, 12%. So I would say that adding a rental unit on a cheaper product generates more value than on a more expensive purchase price.
Okay, so basically, if somebody has a house that basically, around the mill, maybe a semi or smaller detached, right? Do you recommend to add a rental suite before you sell, or they should not spend the money? Because it costs about anywhere from $50,000 to $70,000 to add a basement right now.
Yeah, 100%. Even if you don't make above what you've spent, let's say you get your 70,000 back, you're going to decrease your days on the market significantly. You're going to grab those buyers that wouldn't even consider coming into your listing if you didn't have that additional unit. Not to mention that by spending your 70,000 now, you're making it incredibly easy for the buyer to put that 70,000 into their mortgage. So even though you're spending 100% of that 70,000, the buyer on purchase is only spending 20% of that 70,000. And buyers since it's a buyer's market, they kind of dictate conditions. They don't want to purchase something and invest 100% capital, like without leverage, into a basement renovation. They want that renovation to already be there and to have that cost go into their overall mortgage.
And that's absolutely true, especially from the mortgage perspective. That's where we come in. Banks will actually lend you based on this rental income. And right now, more and more lenders using more of that rental income, where before they were only using 50%. Right now, they're going up to 80 and 90 in some cases. So this way, it will definitely help per person to buy, and they don't have to search for funds to renovate later. So I think this is what we see on our end as well. I just wanted to see if your brokerage is also seeing such change.
Yeah, 100%.
Okay, perfect. So I'm also curious about the resale cycle, where I would say 3 years ago, the average, even before 3 years, last 10 years, the average resale cycle was about 3 years, where people were basically buying and selling. Do you see it's different right now, or you still see the cycle where people considering selling within the next 3 years, so they're thinking more long term?
Yeah, they're definitely thinking more long term. They're now paying attention to the overall transaction cost, selling and buying, not just your land transfer tax, but also you have to sell whatever you have. You got to pay to the listing agent. You got to pay to the co-op agent, legal fees, HST on legal fees, title insurance, maybe a mortgage break-in penalty if they're discharging their mortgage less than 5 years before the 5-year fixed term comes up, right? So they're definitely making longer term decisions. And you're right. I remember the statistic was like average transaction happens every 3.7 years or something like that in GTA. From what I see now, it's like closer to 5. Yeah, people are definitely more mature and more strategic about their decisions.
Okay, that's great. So in terms of GTA markets, right, because you're predominantly working in this area from what I understand, right? What would you say the most resilient markets right now compared to, maybe 2 years ago?
So areas that are most resilient are those that have the 3 factors that I mentioned earlier: employment, transportation, immigration. Usually that means either Toronto, North York, Richmond Hill, Vaughan, Mississauga, Scarborough, Southeast Brampton. If we're talking within Oakville as well, right? If we're talking within these cities, then Toronto is the most resilient. I'm not talking about downtown condo market. That's definitely more fragile now, but Freehold at Yonge and Lawrence, Yonge and Eglinton, Yonge and St. Clair hasn't really been affected, especially product over 4 million.
So basically ultra luxury is still there.
Yeah, hasn't moved. Yorkville, Rosedale, Forest Hill, whatever prices we were seeing a couple of years ago, it's still there. Maybe days on the market has increased, but those sellers are usually not in a crazy rush to sell. And a product that is easy to carry, easy to rent out, hasn't really changed much. So if we're talking Toronto, I'd say any subway line, 2 kilometer radius in either direction, it's pretty stable.
Okay. So from a real estate perspective when it comes to real estate investors, right? Because I'm always was kind of a contrarian. So when everybody sells, I'm looking for opportunities. Do you think there is an investment opportunity right now when it comes to real estate in Toronto, or people should wait maybe another year or two?
I don't think there's a crazy rush to purchase right now. I do think that there's a general uh, theme for affordability improving. Bank of Canada is on a mission to decrease rates, just not too quickly, not to spike inflation. Um, I I would say by in the winter, probably a good time to take advantage of a deflated market. I think in the spring we'll see some upward movement. It's not going to be crazy. It's not going to be where you have to go and run and purchase that specific house after 6 showings. No, not like that. But if I were in the market looking for myself, for my family, I'd probably be looking for a maybe a wider lot, wider property, let's say at least 50 feet frontage and at least 130, 140 depth. And I would look for side access, maybe somewhere where in the future I can build a garden suite. If that's not an option, I would definitely be looking where there's already 2 bedrooms in the basement. Maybe it's a back split, maybe it's a side split, maybe there's an opportunity for not just the basement unit, but another unit at the back. I would not really be looking at condos. I think that's going to be a longer cycle, maybe 2 years. Although a lot of real estate developers are halting their starts. They've done their rezoning, they've done their site plan approvals, and they're just not starting. They're just waiting. And that is a 4 or 5 year lag in the future that we will experience a pretty significant rush because you still need to house expanding population. You still need to house immigration, and that housing is not being built right now. And you can't just snap your fingers and it'll pop up out of nowhere. I think there's going to be a pretty large demand in 2-3 years in condos, just not right now. So yeah, to answer your question, if you're a family looking for a single unit, I'd probably be looking in the winter without a rush. Look at least 20, 30 listings. If you have time, look at 50. You'll figure out exactly what you want. You'll educate yourself, and hopefully your agent will help as well.
No, that's absolutely true. And another question, since you're building, I know yourself, a garden suite, right? For a lot of people who don't know, City of Toronto allowed to build a third unit. If your lot allows for this, you can actually put an extra house and rent it out, right? You can keep it for yourself or you can rent it out. So from your experience, how easy was it to obtain the permits and what sort of obstacles you were facing when it comes to getting approvals to build a garden suite?
So for background, it's almost 3,000 square feet of livable space because I added the basement. You don't have to add a basement. Most folks just do first and second floor. If you do a pitch in your second floor, you'll get permission to do that second floor. Otherwise, it'll be just mainly first floor. But in total, you could make that dwelling almost 3,000 square feet of livable space.
Wow.
And that's huge. That's $4,000, $4,500 of rental income. Depends on which area you're building this in. But that's at least 4 bedrooms, right? Two bedrooms in the basement, two bedrooms
Absolutely, yeah.
upstairs. and it's completely self-sustaining. And if I told my architect, apply with the intention where we don't disturb our neighbors at all, there's no opposition, just go by the book, don't ask for any minor variances, don't make the house closer to that property line or that property line, just whatever the city said, just do exactly that. And yeah, approvals were about 2 months, 2.5. We had one round of comments. We addressed those comments and got a stamp like 2 weeks later. Very simple. City of Toronto is definitely on a mission to utilize backyards.
So here's my question, and I've seen some of them, I financed few of those, right? Over long term, do you think the garden suite will add to the price of the unit, or perhaps it will distract because it takes away from the backyard and the privacy? So if somebody wants to have a house, right, on a larger lot, would people want to have a garden suite? Or perhaps you're only going to be looking for somebody who's either making an investment move, or perhaps can't afford the regular house and they'll be basically looking for the suites. But how will it affect the price?
If your carrying cost of your front house before construction is $7,000-8,000 per month, and you're making a few $1,000s from your backyard, your enjoyment of having those monthly deposits will far exceed your enjoyment of the backyard on average. So yeah, you want to see a bouncy castle, some green grass for your kids, an area to barbecue. You'll probably not get the bouncy castle anymore, and you won't be able to build a pool, but you'll still have a deck, you'll still have a barbecue, you'll still have an area to hang out, and that the marginal benefit of seeing those deposits in your account far exceeds whatever benefit you'd get out of that grass.
But what about the actual home value? Because I just reviewed an appraisal for one of my clients, and it added about $400,000. His garden suite added about $400,000 to the value of the house as per appraisal. But at the same time, the cost to build that was around $350,000, right? So if you go cost to value basis, right, based on this appraisal report, again, we're looking about only $50,000 appreciation from the money that was spent, right? Do you think it's consistent, or in some areas you'll get more than what you spend, in some areas you just break even? That's like the biggest question.
Which city was that in?
It's in East York.
Mm-hmm. I think that as time goes on, the market will recognize the true value of the garden suite. If appraisal only showed 50 grand extra in East York, they were probably going on cost approach. There's not really anything to compare against. There's no sales right now of homes with a garden suite. So what was that appraiser comparing against? He was probably using the cost approach. And that kind of approach is not going to show the true market value add of that dwelling. I think you need to use a comparison approach. And for that approach to really materialize, we need a few years of sales of properties with this kind of product.
Well, that's why I was curious, right? And the fact appraisal was Andy, so we should talk to him about this, right?
On the next show.
Absolutely. Maybe ask these questions, right? But this is why I was curious, right? So from this perspective right now, the biggest benefit of garden suite is the cash flow, right? So you're basically buying a house and you have substantial amount of cash flow coming in that's able to offset any payments, right, that you were making for your mortgage. So that's cool. And in terms of city, right, did they were very comfortable to work with when it comes to garden suites, or you still had to go through some hurdles?
No hurdles whatsoever.
Wow.
Zero hurdles. They're very motivated to move this forward.
Okay. And final question regarding the condos, right, that I had. So compared to homes, right, so how many years do you think for the house market, like single detached, would take to recover? And are we going to see the peaks of 2022? And how many years would you say for the condos to, first of all, to stabilize, right? And when you would see maybe the market appreciation happening again compared to detached homes?
So on condos, I think one, when policy changes on immigration, I think that we need more for the condo market. Let's say in general, most condos per square kilometer are in downtown Toronto, right? So I'll just be referring to downtown Toronto. And usually when there's a large amalgamation of high rises that's in high employment areas or an area where it's easy to get to an employment area, right? So in order for those employment areas to start getting more demand from folks, you need to have those people come from somewhere. And right now, with our immigration policy changes in the last couple of years, that kind of category of young professionals have slightly dissipated. So on one, our immigration policy has to attract more young professionals who want to work in these employment heavy areas. Two, the delayed construction that's happening right now across the board, everywhere in GTA, the lack of high-rise starts, that's not forever. It's the lid will pop off sooner or later. People need to live somewhere. How long will that take? In my opinion, 2 years, 3 years, you'll start seeing a change in quantity of transactions and price point of transactions. Talking about houses, whether it's townhouses, freehold, condo townhouses, just houses in general, I think you'll start seeing some movement by springtime. In my opinion, as soon as a 5-year fixed drops to 3%, that's when your mortgage payment almost equal to rent, or I think that is the point when it equals to rent. And that's when there is no disincentive for folks to come up with a 10, 20% down payment, purchase a house, have that home ownership pride, have that equity principal repayment on a monthly basis. People will jump in. A lot of renters will switch to owners.
Well, I actually got a few phone calls already because, especially for smaller condos, the price of buying and paying the mortgage versus rent, it actually becomes very similar. And I actually got a few phone calls right now saying, you know what, I looked at the prices and I looked at mortgage calculators and what the condo cost me to rent. It actually makes sense for people right now to actually own. So here's my question for first-time home buyers. Do you think condo still offers a good opportunity for first-time home buyers to put their foot in the door and basically start their journey of home ownership, or they should wait and maybe wait for the market to come down a bit more, maybe jump into townhouses if it's possible?
I think if we're not at the trough right now in the condo market, we're close to the trough. I'd say in the next half a year, in the next year, you'll make a good decision by purchasing an asset that has already depreciated, in my opinion, to the max or almost to the max. I don't think there's a crazy rush to get in, but if I was somebody who's just entering the market, I would strongly consider anything where the price point today is 20 or 30% lower than it was 3-4 years ago. I would literally just look at 2025 sales, 2021 sales. If I see a 20-30% adjustment, I would go for that product as long as monthlies are cheap.
So basically, talking about 21 year sales, not 22 or 23, right? So
from the peak, yeah.
Okay, gotcha. So because you were involved in real estate development, right, for the condo unit, what would you say was the break-even point for the condo developer per square foot to build a condo?
Yeah. So right now,
Before the profits, like what would the actual price per square foot cost was for the condo developer?
The margin right now, if you're doing everything efficiently, is $50 per square foot, which is tight. With any variables, any uncontrollables, you're either at zero or in the red. So it's a bit scary for developers, especially if they're not on CMHC financing.
Yeah. And for people who don't know, CMHC financing allows you to get cheaper financing for the builders as well, because builders also get financing. And if you can get financing, your cost of carrying the project, and usually it's a multi-year project, right? So it skyrockets. So your profit margins go down significantly. That's why it's super important for builders to stay within certain guidelines of pre-sales and everything else. Otherwise, the project can go into red overnight, pretty much.
Yeah, that's right. But yeah, there's no one number to answer your question directly. Depends on several factors. How many floors are below grade with each parking level below grade?
Yes, parking is expensive. Actually, would you agree that when you're a developer, building parking one of the major costs when it comes to condo construction?
Parking is what makes development decisions. It sounds funny, but if the city is forcing you to have, let's say, a 1.5 ratio of parking to units, or even 1.2, and because of that, you have to build 3 stories below grade, versus if they were giving you a 0.5 ratio and you're building 1 story below grade or 0 stories, that's all the margin. Every floor of underground parking doubles in cost as you go down. So it's parking. It's how much of a side density you got above grade. What kind of finishes are you looking for? Are you targeting the more affordable part of the market, younger families, a more luxury bend?
So I guess my question, in today's market, right, if you go in and buying at existing prices, and you can literally get right now places at $800 square foot, right, on the resale market, is it below or at construction cost?
That's pretty much at
construction cost.
Yep.
So basically right now you're buying a unit as a builder build a unit and made no money.
Yeah. If 800 is, if you're finding units at 800, which absolutely you can, easy. In some cases, that's below construction cost. And I'm not talking brick and mortar. I'm talking soft costs, interest costs, development charges, everything in total. How much will this building take to build for everything? In some cases, it'll be above 800. So as a developer, a few years ago, you could easily justify a 15% margin for a pre-con that's going to be built in 4 years, and people can purchase just a piece of paper and then assign it 2 years later without closing, without getting any financing, and make $30,000, $50,000, $100,000. And because of that, pre-construction was in high demand. Nowadays, it's just, again, numbers. If I'm buying this at $900 and it's brand new, but then there's this one across the street that's 2 years old, but it's $800 per square foot, people are going to flock to 800.
For sure. So with government talking about reducing the development charge right now, which adds a lot to the cost of the unit, do you think it will allow builders to go back into the market and start offering their product, or they will still wait for the market to recover overall before they start reintroducing the new units?
So a lot of developers that are sitting on land, they're very motivated to start building, because if they didn't buy that land in cash, they're still carrying it, right?
Cost.
It's a small percentage of the total construction cost, but it's still like a few million. depending on the site and location. Um, but to answer your question, um, I think the proposed decrease in development charges throughout different municipalities right now is not enough to incentivize developers. It needs to go down more. The red tape needs to decrease. In some cases, you're getting approvals for 4 or 5 years. That's not feasible. You can't run a business when there's this much unpredictability. If your team has done everything you've submitted, and you're waiting for 5 months on basic comments, and you go through several rounds of that, that's very discouraging to developers who are business owners, right? And they have large teams that they need to feed. So yeah, the direction is definitely positive, but it is not in isolation sufficient to motivate construction.
So, what would you say 3 government policies that would need to be implemented for the real estate market to take off?
Well, a very simple one, and I'm not suggesting that we do this. 50-year amortization. It'll definitely stretch out the time period, how long it'll take for you to pay down the principal on your mortgage.
Yay, that's what Donald Trump is offering right now, right in the US.
Right. I think in the long term, in the short term, it's great. It's gonna.
By the way, there is a mixed feeling about this in the States because some people say just useless. The payment in many cases may drop $300, but then you pay triple for the house that you buy, right?
Yeah.
But where I agree, where if you take advantage of the short term, you can still adjust amortization. All you have to do is just increase your payment amount. Your amortization goes on 25 years.
Yeah.
So what Serge is saying here, that your affordability for the bank ratios will allow you to jump in and therefore stimulate the market. Then you can make the payments double of what you're paying right now and pay down 20 years.
Yeah. But that's a logical conclusion, and the market is not often logical. They'll just go for maximum affordability they can afford, and they'll not really pay attention to the fact that they're now required 20 extra years of their life to pay down a home that they live in. So in the short term, it's definitely going to give a boost, but in the long term, it's just going to cause inflation in the real estate market. And then once things stabilize, we'll be at the exact same crossroads where we'll be asking ourselves the question, oh, should we make our term 70 years and 90 years? It's just going to keep going. It's a short-term solution. I don't think, unless the product forces people to have their repayments made as if it's a 30-year term, but they have 50-year equivalent payments. Like, if they have to focus on repaying the principal. In that case, that product will make sense. Otherwise, it's just a inflationary.
Yes, absolutely.
So policies that would actually work. Real estate development charges are not the only charges from municipalities. There are several others, even connecting to Enbridge, connecting to sewers. These are major costs, especially if you're talking about a high rise, say like 200, 300 units. So servicing cost that is controlled by city crews, I think that needs to become more efficient. There's definitely, you can really privatize that to make it run smoother.
Yes.
But I think there should be caps placed on those things because they've increased dramatically recently. And I think that most development departments in the city need to triple their staff. One of the holdups is just time for developers, and there's no reason for an application to take 4 years at a city. Just the teams are understaffed.
I mean, compared to China, right, where they build overnight pretty much.
Yeah.
Maybe not the best construction practices
Yeah.
at times,
Yeah.
right? But still
You
fun.
still need to keep it safe and make
Yeah.
sure buildings don't fall. But there's a healthy balance. And with a larger team that has specific metrics they have to meet on a annual or quarterly basis, you can achieve that. And right now, that's not the case. So yeah, I would say decreased costs for anything construction related and planning related, for the developer who eventually just passes on that cost to end user. So the buyers are paying for it. Second, increase the number of folks at the city that are processing this, to make everything quicker. And third, maybe provide some kind of extended CMHC programs, like government-sponsored programs, for the soft costs for developers for the time period between acquisition and construction, because that's a very volatile period. And that discourages a lot of folks from improving density on a parcel.
Okay, I see. So basically, let's summarize affordability for the buyers and decreased cost for the development, right? That's what you see to get the market going again and create this equilibrium between buyers and the sellers in this regard.
Right.
Okay, that's cool. And I want to finalize with a question, right, that I ask a lot of people. If you were basically in the market right now, like the things that you would do to reflect in the next 10 years, right? What would be the best decision that the person can make now to look back and, 10 years from now and say, you know what, I could think I've done it. Like, what would you think the decision would be?
On what kind of product to
On
purchase?
the real estate, yeah.
Well, I think number one, stop transacting as often as people do. Just create a longer time frame for yourself. I'm not saying don't buy yourself an investment unit or whatnot, but as you're entering the market, and if we're talking about your primary residence right now, don't go for a 1+10, knowing that in 3 years you're gonna pay real estate agents again to get into a townhouse. Just squeeze yourself a little harder now. Try to go for a unit that has that additional rental income in the basement, or if it's a backsplit in the back of the house, whatever. Just go through a rougher time now to get yourself a better product, and keep upgrading every 3-4 years. If you add up all those costs over your lifetime, you're losing significant value. And I know that a lot of real estate agents won't like me saying that, but that's the truth. Like, just have a longer term outlook. Get product that is not for your next 3 years, but for your next 10 years, maybe 15. Try to be close to transportation hubs. Try to be in areas that are bulletproof against recessionary time. You'll probably get adjusted regardless, but maybe not as much. Don't be in an area where one industry controls the entire market. Let's say South Oshawa, right? Like, we know what happened.
Yes, auto industry.
With the plant. So be in a stable area. Pay attention to your school zones. Pay attention to your infrastructure. Pay attention to how many people are moving in every year. And stretch yourself in the beginning, and create a 10-year plan for yourself, not a 3-year plan.
And I would say, and contact Serge for any real estate related needs. and ask for your mortgage. Well, at this point, I would like to thank you, Serge, for coming today.
Thanks for having me.
I think we had an exciting topics to cover today, and I think hopefully it gave an insight to a lot of homeowners or buyers and sellers to see how they should adjust themselves in today's market. And I'll see you guys next time.